consumers, home buyers, renters are still facing, many headwinds from in terms of the economy, but also in terms of housing markets and the lack of affordability.
I want to focus on what the outlook is for the next few years. Can you dive a little bit deeper into that?
We are in a context this year and the coming years where economic growth will be rather subdued. Still, relatively stable amounts of supply. And the rental market should stay a bit less tight than it was in the past years.
What are the biggest long-term challenges that you see with our housing market, Kevin?
The single biggest challenge is that for a great number of Canadians, housing is unaffordable.
You're listening to In-House, Canada's housing podcast, where we share the latest on Canada's housing market. The economy is gaining some momentum, but Canada's housing market hasn't really followed suit. Home sales remain soft, buyers are hesitant, and uncertainty continues to shape CMHC's outlook. So what's changed since our January forecast, and what does it mean for Canadians looking to rent, buy, or build? Well, welcome to In-House, and I'm Joelle Hamilton, and today with me to answer these burning questions is Deputy Chief Economist Kevin Hughes. Welcome back, Kevin.
Thank you.
I feel like a lot has happened since you were here in January, so I'm excited to really dive in. But I'm hoping that you can give us a quick, maybe 20-second soundbite on the one thing you want our viewers to retain from this episode.
Well, I think that definitely consumers, home buyers, renters are still facing, many headwinds from in terms of the economy, but also in terms of housing markets and the lack of affordability.
Okay. So when you were here the last time and when we released our housing market outlook in the winter, we were really expecting stronger economic conditions, and that would support a gradual recovery in the housing market. But as you briefly mentioned, that's changed. Why?
I'd say structurally, nothing really has changed. The economy is as it was six months ago. But of course, there's a few events that have transpired over the last 6 months. And this is precisely why we do an update, is to adjust according to major events. So obviously, there is the armed conflict in the Persian Gulf, which had impacts right away on, gasoline prices. Inflation crept into inflation a bit, but also compounded the already high level of uncertainty for businesses and also for consumers. So that definitely was, an additional element that was not foreseen. And of course, no one foresaw that. The other element too was that we were continuing along our kind of rocky road on the trade story, so that we're still in a situation where negotiations are underway to try and resolve some of the differences between the way we see things in Canada and the U.S. And so that's continuing, but it's still creating that uncertainty in terms of going forward. Do I buy a home? Do we hire people? So that's holding back the economy. So the economy could still be fundamentally sound, but it's lacking that impetus to actually get into motion, right? So that's something that's really important a distinction to make. We also talked, I think, the last time we met about the mortgage renewal wave, and I think we can say that is more or less on the verge of being complete. No major, shocks on that side. However, we have to realize that people now are paying higher interest rates and paying more every month for their mortgage, and that is impacting their overall spending planning, and so I think that's a few things that we've seen now in the last 6 months.
Yeah, I mean, I and many Canadians out there had to rework our budgets based on the extra amount that I now have to pay towards my mortgage when I renewed my mortgage this spring. So a lot of us are definitely feeling that crunch. Okay, but I want to fast forward just to today and talk specifically about what Canadians are experiencing on the housing market, one, as renters, and then two, as homeowners/home buyers?
Right. So renters have, generally speaking, more choice. So the market has eased. There is more supply because there has been a lot of building of rental apartments in the last year or so. So more supply and demand has also gone down. One of the areas that's gone down is immigration. So those levels are lower. We were expecting that, and that's been the case. So supply demand it made its way into the numbers, and so we're seeing markets that are eased. Now, having said that, the rent levels are still very much high for many people, and so that is not to say that everything is rosy, not at all. But there has been a bit of adjustment there. But in many cases, it's still quite difficult to find a place, even though the vacancy rates have gone up.
I know Tanya was here talking about that when we did our rental market report update, and like asking rents are falling, but the actual rent that tenants are paying is not necessarily
That's right.
dropping. So they're all still feeling
Yeah.
that financial crunch. We've covered a lot, Kevin, about the economic uncertainties, the unaffordability of like either like home buying or renting. But I want to focus on what the outlook is for the next few years. Can you dive a little bit deeper into that?
If we start with the economy, we still believe that the economy is facing several headwinds. And so we are in a context this year and the coming years where economic growth will be rather subdued. And this will have an impact on consumers and businesses' decisions, especially consumers in housing, to buy homes or even to form households. So, young people who are living with their families, when economic times are good, they move out and then so that may not happen at the same rate that it should happen. So it will have impacts on demand, and that will influence obviously the market dynamics, the price dynamics as well. Not much indication that supply either is going to be creeping up a lot. So still, kind of relatively stable amounts of supply. And the rental market should stay a bit less tight than it was in past years. So we talked about easing. That should continue to be the case, at least this year, maybe next year as well.
So, if the scenario that you just talked about does not materialize for certain reasons, what is an alternate scenario?
This baseline scenario could be different, let's say, if there were, for example, a intensification of the conflict in the Middle East, which would drive up for longer prices, and so it wouldn't just be prices at the pump, it would be general prices that would increase. Supply chains, for example, those would also lead to more inflation. So those are things that could deteriorate on the international front. On the trade front, of course, the negotiations could continue to drag for another year. I mean, we've assumed that in the coming years there will still be tariffs, and I think that so far that is likely to be the case, but it could deteriorate. That's another area where the economy could suffer, and then of course home buying, and of course what's the general environment here is that in this alternate scenario is that inflation would be higher perhaps, and that would have definitely an impact on rates and of course on housing demand.
So we spent a lot of time talking about what we're seeing today. So it was like that slowing demand, affordability has improved in some markets, the impact, like that economic uncertainties can have based on various scenarios. But we know that housing is a long-term issue, and that decisions that are made today in the housing sector, those shape what the market those shape what the market will be for years to come. So what are the biggest long-term challenges that you see with our housing market, Kevin?
I think without doubt the single biggest challenge is that for a great number of Canadians, housing is unaffordable, be it the rental market, be it on the new home market or even the resale market. Incomes have not kept up with prices, and it's still, the gap is quite substantial. And as you know, we've measured what the supply gap would be, and it is quite a large gap. And as far as our forecasts are concerned, we are nowhere near filling that gap in the short term. And I think that's no surprise to anyone. We are encouraged, having said that, we are encouraged by the initiatives that are, that are taking place right now to increase that supply. So that's definitely, I think, good news. But right now, it's not like this, as you said, it takes a while for these things to actually materialize. So I think that really is the biggest challenge, without a doubt. And failing very, very rapid and substantial changes, which we don't see in this outlook, things are probably going to stay the same before they get any better.
And I can't remember where I was reading this, but it's about increasing supply, but also increasing so that it's the type of supply that Canadians need down the road. So hopefully we're making those decisions now.
Well, I mean, I'll go back to your question. Will the decisions we make today
Yeah.
have an enormous impact on, the implications on people, not only this generation, but as we know, housing lasts a long time. So that's a very important call to make, and it's not an easy one either.
You're very right. It's not an easy one. And talking about housing is never an easy topic because it impacts millions of Canadians and, everyone across the country. But Kevin, that brings an end to our episode today. I want to thank you again for joining me in the studio and walking us through an update on our housing market perspective, which was very much due because there's so much changed. There's so much changed between January and now. So thank you. I looking forward to having you back in the studio in 6 months' time. And I guess we'll talk about what's happened with the conflict in the Persian Gulf and CUSMA negotiations. And thank you to our viewers for joining us in-house. See you later. Did you know we're not just on YouTube? You can now find us on Spotify, Apple Podcasts, and Amazon Music. Don't miss our next episodes for more real, data-driven discussions. If you're learning from and/or enjoying this podcast, please share this episode, follow us, or subscribe. Reach out. Let us know what you think. Thanks for listening, and see you next time.